Hello ladies and gentlemen, my name is Raymond and today we're going to go over how to file your G-49, which is the GET annual return for the state of Hawaii. So if you'll take a look here, we have the G-45, G-49, and the withholding links. And of course this is your home page right after you sign in. So on the G-49, that's where we're going to start actually filing it. But what I'd like to do is I generally like to click on G-45 and then click on submissions. The reason why is we're going to need some numbers from there. And for the sake of this video, I'm going to show you what it looks like if you don't go to G45 first. So we're going to go to submissions, view submissions, and this is going to bring up all of your previous submissions. And the reason why I like to click on G45 is because it will exclude your G49 annual return from earlier this year that you might have filed, if you filed one at all. If this is your first time filing, this won't even show up, but this is what we're trying to avoid here. But for this sake, we don't need to go back and click on it because I've already taken all these numbers. And you want to start with January here. You want to look under period and start with January if you're monthly. If you are semi-annual, you'll start with June. If you're quarterly, you will start with, it'll be March or April, but I'm pretty sure it's April. So let's go back to the home screen here. And then we're going to go to accounts. And those numbers I just showed you, like I said, I have them in Excel right here. The only one I've had to plug in as a sample number is this one right here. That's why it's a nice round number. That's just because we haven't filed December yet. So let's take a look here at these other numbers. These are going to be the numbers that you will generate from your own bookkeeping or accounting software. So for each island, you'll need to run the revenue report for each one and then list them here. For Oahu, we had deductions each month of $73,601. It's always the same. We had some from Maui too, but I didn't include them. Sorry, I didn't include them for this example because it's not necessary. So I brought that number down here for you, and then when you subtract the deduction from the total revenue, this is the amount that you'll get, and I'll show you why I had to do that in just a moment. So let's get started with this G49. Alright, so once you click on it, you're going to click File Return here. If you haven't filed your December return yet, this message will pop up. I don't think it'll pop up after you've filed it, but just in case, just know that it's there. Make sure that you filed your December before you start your annual. Next. For this company, we actually used all counties, and we did have exemptions. Now these other two items don't apply, and I haven't had any experience with them yet. So let's go to next. On this screen, this is for the wholesaling rate. You see the 0.5%. We didn't actually do any wholesaling on this company, so we're going to go to next. And as I'm sure you've noticed, they still have the old format here. So this is what the G45 used to look like, but now they give you one page for each county. That way you can complete them all, with one train of thought, and it works much better than this software, or this version, I should say. So what we're going to do here is other rentals, because it's a commercial rental company. We're going to let's start with these other counties first. We're going to take Kauai and add it in. And I'm just going to speed this up for you here until we get to Oahu. Okay, and for Oahu, since that's the one that had the deductions, we're going to do something a little bit different for that company. So this amount that I told you I would explain later, this is it. We're going to take that amount and we're going to put it in here. And I will show you exactly why when I put in the deduction. So we're going to hit next. Next page is going to be for insurance commissions. We're not in the insurance industry, so that doesn't have anything to do with us. And these are going to be your county surcharges. It's going to show you how much you owe each county specifically, not the state at this point. Next. And then wholesaling, nothing to do here, but when you come down here, this is where we're going to enter our exemption. So we'll go back to the Excel screen and we're going to pull that exemption and we're going to paste it right here. And the reason why we subtracted it on the front end is because, watch this number here, it's going to actually add it. And that's one of the parts of the software that's obsolete, which I believe is why they updated the periodic version of the software. They still haven't worked on the annual one though. But you'll see that this number, if we take this out, is the same as what this was before. So that number actually doesn't change, and it's a very strange glitch that they had in the software. If you come down here to the bottom, you'll have the county surcharges again. You don't need to do anything here because you've already claimed the deduction here. So that's why this says 2.8 million versus the 3.7 that it was before the deduction. So that's already built into this number, the deduction is. So don't put anything here. Next. This is for the revenue stream of 14, which was other rentals, as you saw earlier. So the deduction is going to be under other rentals. And then I'm going to type in 16.5 because it was a sublease deduction, and I have that part memorized. And then what we're going to need to do is make sure this number matches this number in yellow here, which is just your exemption. So I think I already have it copied to my clipboard. Yep, sure do. Next. And then you're going to put in a GET number. When you have a sublease deduction, they require a GET number of whoever the sublessor is. So we're going to just type in a random one for the sample here. I forget how many numbers it has to be. I'm just going to be super random. And you type in the company number that is associated with that GET number. And then after you go to next, you're going to come to this screen, and this is where you will enter in how much you actually paid. And as we started out, that's what this information is right here. That's this sum. We're going to type it in here. And once we click out, it's going to automatically calculate for you the difference. So it's going to tell you how much you owe or how much is owed to the state. So if you take a look, it will say credit to be refunded. That means they owe you this much. If it says anything else, that means that you underpaid for the year and you need to pay the state. And I've never put in any penalties or interest. I believe those should be automated. But this is kind of a true up area, so I feel like this is the time to be as honest as possible. And you should be anyway, of course. But let's see, we got this amount. Now if we were to say that we paid less, let's say we paid $340. Then it's going to come down to additional taxes due, and that's going to be what you owe the state. After that, you just hit next, you'll submit your payment, and it'll be pretty easy from there, pretty easy to follow from there. Just make sure that when you're done, just like with your periodic filings, you go back to the home. Then you're going to go to submissions. And you want to make sure that you see in this area that it says return for and payment of if a payment is due. If you don't see the payment of, that means a payment wasn't processed, but of course if they owe you money, payment shouldn't be processed anyway, so you're good to go. And that's all for this video. Thank you very much for watching.